Chris Barks here, McLean Mortgage. I'm trying to give you a little bit of a heads up on how closing costs work. I know how difficult some of this stuff can be to understand, so I'm going to put together hopefully a 10 to 15 minute video real quick here on how closing costs work if you're looking to buy a house. So I'm going to give you a couple different insights as far as how this works, and I'm going to go live into some actual scenarios with somebody that I did in the past. I changed the names to hide the innocent so we don't have any compliance issues. But I did want to make sure that at least you got some information on what this looks like. So first of all, what I'm going to do is I'm going to come into what's called the closing cost breakdown, which is just a sheet that kind of tells you what the different pieces are. And then I'm going to show you a little bit more about how to read this in an actual loan estimate. So the commitment fee that you see right here at the top, this is really something that most people call it origination fees. It's fees that are designed to give the loan company a chance to cover some of their costs. Most costs that we have in a loan company are for processing, for underwriting. And so we have to charge for them because people are doing work to make it happen. Now, the next ones you see right down there are discount points. Those are to help lower the rate on your mortgage. So if you want a lower rate than what's available on the marketplace today, we certainly can do that. Sometimes you just have to pay for it. The appraisal fee, what you're going to run into there is the information has to be verified by an independent party. So since 2009, we have to send out an independent person to make sure that they go out and they view the home, check out the home to make sure the condition of the home is exactly the way it's supposed to be, and that the value of the home is supported not only by the purchase price, but by the community around it. To make sure that when you're buying this home, that you're not buying something that's inferior in price, even though it's really jacked up. In other words, it's a legitimate transaction. We're not trying to take advantage of anything. That's a very important piece because in most cases, if the home doesn't appraise, you do have the opportunity to back out or renegotiate the contract, unless you've waived that right. So I would highly encourage you not to waive that right, but that's something certainly to take a look at. The interim interest right there, that is like a miniature mortgage payment for the month. So usually it's based on a per diem of interest. And so let's say, for example, you're closing in July. And so in the middle of July, you pay a small little piece of interim interest. You skip your August payment, first payment would be in September. That's kind of generally speaking how it's going to work. Mortgage insurance, generally speaking, you're going to have only if you're putting less than 20% down or if you use a government style loan. So those are some things to kind of keep in mind as you're going through that, is that mortgage insurance may apply or may not necessarily apply depending on what you're doing. Hazard insurance, that's the legal name for homeowners insurance. So, you know, whoever you want to use, Geico, Allstate, State Farm, Progressive, Erie, Northern Neck, there's a bunch of them out there. Just call your favorite person, get a quote on it, and then we'll go from there on it. The escrow deposits, what those are is in essence you prepaying your taxes and insurance for the next 6 to 12 months just to make sure that you're ahead of the game so that once you get started at the loan, you never have to write a big check again. It's all included in your monthly payment. They take it out of that account when the escrow actually happens, is all set up. You're making monthly payments, putting money into that account, then they take it out when the next tax bill is due or the next homeowner's insurance bill is due. The attorney's fees, this is for settlement itself. And so what they're going to be doing is they're going to be verifying that the seller is the seller of record, that the seller has the right to sell you this property, and that when they sell you this property, they're going to sell it to you free and clear of any liens, assessments, or judgments. And the reason why that's important is because those items follow the house. They don't follow the people vacating the house. And so that's a pretty big deal because if you're trying to buy this house, and there's a judgment attached to this house, it doesn't follow them. So if you are the brand new owner of a brand new house and they don't catch it, it's now your debt. So that's what the attorney is going to be doing. In fact, it's such a big deal that that's why they're selling you title insurance, just to make sure that if something is missed, something happens and there's a defect in the title, something transferred with the home that they didn't catch, that you're not responsible for somebody else's debt. That insurance covers it. And you just buy it one time, and it's for the life of the loan, okay? The recording fees, what that is you're gonna go down to the county court, not you, but the attorney is gonna go down to the county courthouse, and they're gonna register you as the rightful owner of this new home. Upon doing that, what they're going to be doing is they're going to be making sure that, that it's all transferred legally into your name. And then there's 2 sales taxes that are usually paid at that same time. One is gonna be paid to the county, and the other one of which is gonna be paid to the state. These last two items that you see down here at the bottom, the survey and the termite inspection, both of those are really going to be optional. The survey is just for you to determine whether you really want to, get the fence in, or put a pool in, make sure that you're not encroaching if you do decide to build, or maybe your neighbor has built a shed that looks like it's a little too close to your property line. You want to make sure that you get that survey done so that the seller has to fight them, not you. The termite and the home inspection, those are items that are optional as well. Usually in Virginia, the seller is responsible for taking care of those items. So I'm going to go to another screen now and kind of show you live how that works when you're dealing with an actual loan cost estimate. So I'm going to go into that one right now, and you can see it right here. This is an actual loan cost estimate. I put the borrower's name as test just to make sure that you can kind of see that I'm hiding the innocent in this case. But anyway, you can see there's two columns, left and a right column, and both of these columns have their own purpose. The one on the left-hand side is going to be the one that, in essence, is going to be giving you the details of the transaction, the costs associated with the transaction. So if you remember right at the top, you've got the processing fee, and then you've got the underwriting fee, both of which are going to be related to the purchase of the home, and actually part of the whole situation as far as the loan company is concerned. That's how they're getting paid. That's really, in essence, all the money they're making. Everything else after those two items are going to be pass-through fees. Now, where that changes is if you're dealing with an origination charge or a realtor admin fee. Those, in essence, can be considered junk fees. It's really something that you need to take a little closer look at to see why you're being charged for a realtor admin fee or an origination fee. Sometimes there are costs that the realtors have to absorb, and so they pass those on to you in that situation. All right, so those are the only two fees that come to us. The only ones that's out of pocket ahead of time is usually this one right here for the appraisal, and you can see that right beside it is labeled POC. That means paid outside of closing. Most companies are going to go this route when it comes to the appraisal, and that is because it's a hard cost that gets done prior to settlement. And so if you back out right before settlement, they're out $455. And so it's kind of a way for them at the same point in time to make sure that they're covering that cost in case you do decide to back out. Now you can see the final inspection in this case. That final inspection is really, what that is for is in case you're buying a new construction. In new construction, that is going to be them going back in after the home has been completely finished to make sure that they put the light fixture in the right spot, that the light fixture still is there, that what they promised on the plans is there, that what they promised with the faucets, the quality is there. That's what that final inspection is, just to make sure that it's done and that they're not trying to rip you or the bank off in getting that done. These title charges, once again, that's what the attorney is going to be doing. He's going to be verifying that the seller does all that stuff, that he's a seller record, et cetera, et cetera. There's your taxes and insurance, okay? Going down a little bit further, that top left-hand corner, it is called estimated closing costs, but in essence what that is the legal transfer fees from you to the seller, from the seller to you as the buyer. And so that's a very important piece because it is illegal. It's not just wasted fees, not just junk. It's actually done to protect you and to legally transfer the home from the seller to you. Now, when you go into the bottom left-hand corner, these are what are called estimated prepaids and reserves. With these prepaids and reserves, in essence, what you're doing is you're prepaying the homeowner's insurance and taxes for the next 6 to 12 months. In the Richmond area, taxes are paid twice a year. They're paid in June, and then they're paid again in December. And so the reason why this is important is you're prepaying, as you can see here, you're prepaying the taxes to make sure that when that next tax bill rolls in, that it's already been covered, okay? And then every month thereafter, you can see that it's included in the monthly payment. So now if you go into the right-hand column, you're gonna see that we're talking about an estimated value and an estimated purchase price of $387, $385, different things right in that area. You can see what the interest rate is. As you go down, you can see the total estimated monthly payment. You can see here that there is no mortgage insurance, and that is because he, in essence, has put 20% down. More than 20% down in this case. He's actually put almost 36, 35% down. So going down a little bit further, you can see the estimated purchase price right there at the top. Right below that, you can see the estimated closing cost, which is the reflection of everything in the top left-hand corner box, the legal fees to do the transfer from the seller to you as a buyer. So that's going to be the important one right there. Into the next box, you can see the estimated prepaids. That's a reflection of everything in the bottom left-hand corner box. In essence, you're prepaying homeowners insurance and taxes for the next 6 to 12 months to make sure that you don't ever have to strike another big check. Instead, now it's going to be included in your monthly payment. You can see that in the box, in the middle box right at the top. Go down a little bit further, you can see there's a lender credit in there. So all the credit sections in here, if you're going to get a credit from the seller, you're going to get a credit from the lender. In this case, he was a great past client of mine. And so I gave him a little bit of a discount to help him with his closing costs. And then all the way down at the bottom, not everybody's going to have $141,000 to put down. In this case, he's a second-time home buyer buying a really nice second home. And so he had a fair amount of money to put down because he had just sold his first one. That's the place to see how much cash you're supposed to be bringing to closing. So anyway, I just want to make sure you saw this and that you went through this whole little scenario, kind of like what I do on a daily basis, to make sure that people understand exactly what it is that they're getting into when it comes to closing costs. Love to share this. Hope you see this as value and you get a chance to share this with others. Thanks so much. By the way, if you're in the Richmond or the Virginia area and you would like to talk to me about purchasing a home or refinancing, don't hesitate to give me a call. Thank you so much.